Welcome to our performance of 2020-2021. As has become the tradition at the fund, we give a sneak preview into the performance before the minister announces the interest rate that is going to be given to our members. That is going to happen next week on Wednesday, on the 29th. And of course, the world will be tuning in. But today, it's for you, the financial press, and our members out there who are tuning in to listen to how we performed, what are the challenges. And everything happens around the environment. So, beautiful, beautiful views in our pictures. And you'll notice that, as usual, everything has to happen around the clicker. Everything happens around the clicker when it works. At the moment, it isn't. No, you've run quickly. So everything happens around the environment. So I would like to share with you the environment in which we operated in. As you probably know, the environment is everything. Look at the graph. It tells us that last year, there was a little bit of recovery. We all know that the pandemic hit us square on in 2020 in March, and you'll notice that the economy felt that full blow. So the performance of GDP growth was only 3% during the previous year. It did recover to about 3.3%, and although that was a little recovery, it does not really do us justice, as you'll be able to see in the performance of the fund. When you talk about the environment, inflation is so important. So let me paint this picture. It appears like what happened is that the economy went really down and began to recover in 2021. But because there was very limited economic activity, the issue of prices appeared also to be down, and we saw that inflation was actually coming down. So if you look at the two the blue line and the orange line, it will show you that core inflation was around the 3.5% at the end of June this year, having come down from 2.2% in the previous year. But headline inflation did come down to about 2.5%. But at the fund, we look at our benchmark. What's our benchmark? Our benchmark is the long-term 10-year average inflation. You'll have noticed that it has been coming down. It has been coming down because in the couple of previous years, before this presentation, the inflation was high, and therefore, we are now coming down because of the benefits of the drop in inflation that we are seeing now. So far, the picture is performance of the economy did not grow as much as it was anticipated. You recall that the figures that the central bank and the Minister of Finance sort of project is around 5%, 6% growth. We only grew at 3.3%. Inflation was coming down, especially the headline inflation. But in terms of our benchmark, you can see that our benchmark did come down to about 5.43%. And that 4.3% is an important number because that's where we benchmark the interest that we pay to our members. So that's what we are working against. What else happened? In the fixed income space, in the bonds market, in the interest rate regime, our story was very, very different. I would like to pay attention to the red line. The red line is the latest yield curve. The short end of the yield curve, that is the 3 months Treasury bill bond, or the Treasury bill for 3 months, is at around 6.9%. The 6-month Treasury bill is at about 8.92%. The 1-year Treasury bill is at 9.84%. But look at the year June 2018. The 1-year Treasury bill was at around 14.5%. In fact, that year, the 15-year bond, which was the longest bond in was at 16.63%. But look at what happened to it last year. It dropped to 14.36%, which basically shows you that the yields on the Treasury bonds came drastically down. That is the environment in which we had to operate. That's the environment in which we had to invest, which means that if you look at our portfolio, which is about 78% in Treasury bonds, it came down drastically, and that affected our returns, as you'll see later, on our investment in Treasury bonds. What else happened in the equity markets? A little bit of good news in the equity markets, because you'll see that most of the equity markets in the East African region recovered. There was a very good gain on the Nairobi Stock Exchange. It grew by 26%. On the Uganda Stock Exchange, a modest increase of about 1.9%. And on the Dar es Salaam Stock Exchange, that was about 5%, 4.8% increase. So a positive outlook on the equity markets that we are basically seeing in our performance. And again, that will be reflected in the results. Next is the foreign exchange. Foreign exchange is so important for us because almost 35% of our assets are held outside of Uganda, which means that we've got to translate those assets back into Uganda shillings. So the movement of the foreign currency is so important for us. But what happened last year? There was a gain, an appreciation of the Uganda shilling against the US dollar and the Kenya shilling. These gains were, these appreciations were so much. On the Uganda shilling side against the Kenya shilling, it appreciated by 6.1%. Last year, the exchange rate was around 35 shillings per Kenya shilling. Today, we ended up about 33. So the strengthening of the Ugandan shilling. The US dollar was even a little bit on the higher side as well, 4.7% appreciation. We ended up at about 3,561.5 from a high of 3,729 in June 2020. So what does this mean? It means that although our assets might have increased in foreign currency, but if you translate them back into shillings, the figure is lower. That low balance is reflected through your statement of income, and therefore you have a loss on your currency position. You might not have sold the currency position, but certainly when you reflect it in your balance, in financial statements, there will be a loss. And therefore, when Uganda shilling appreciates, unfortunately for us, it is a negative, not a positive. Good. So the appreciation, of course, was a combination of factors, and as you will see, that did affect our performance. I would like now to talk a little bit about the fund. The environment that I've just painted is 4 things. The first is growth. Very little growth, largely tempered by COVID. The second thing was inflation. Inflation was coming down, largely driven by no increases in prices. But we saw that the bond prices came down, or the interest rates came down, the yield curve following suit. And we also noticed that the exchange rate strengthened out of our favor. So the fund definitely had to respond to a lot of this. I'd like to first start off with our exposure. You'll notice that most of our exposure or our investment is in fixed income. 78% of our assets are in the fixed income. So when interest rates go down, as they did, it affects a big part of our proportion. Only 15% of our investments are in the equity space, and as you've noticed, the equity space did really well. and real estate, which is a very small proportion. Again, you'll notice that there has been some impact, especially on the sales side of our real estate portfolio. So, how does our performance look like? Our performance is, there is little doubt that the last financial year was a difficult one from all perspectives, from an operational perspective, from the environment. However, the fund has demonstrated resilience as we continue to do so, because we've withstood some of the shocks that the pandemic has thrown against us and affected the businesses not only within Uganda, but within the East African region. And this is also a global phenomenon. So from the performance, you'll notice that our assets under management grew by about 17%, which is slightly higher than the growth rate of the economy. Of course, slightly higher, I'm saying that, because the growth rate was only 3.3%, so 17% was a lot higher than the growth in the economy. So that's the resilience of the fund, the fact that we are still able to grow at 17%. And I will break this one down to show you why we were able to grow with the assets under management. Last year, we had a balance of assets under management of about 13.3 trillion shillings, and this year that went up to 15 trillion shillings. So this is truly a 15 trillion fund. It is truly a $4.4 billion fund. Comprehensive income, again that went up 25% from 1.4 trillion shillings to 1.8 trillion shillings. This was driven by an increase in the treasury bond in the fixed income. So I talked about the rates, but you saw that the rates came down. So the income went up. So what happened? Of course, what happened is that we had a bigger investment pool, which we put in. So in terms of quantum, your returns will go up because of volumes rather than price. So that's the reason why our income did go up as a percentage from the previous year. But the other thing is that because we are a long-term investor, there are some long-term bonds we've locked in. You saw the yield curve, the 20-year treasury bond was introduced last year. So some of those good, long, good-paying yield bonds, we did invest in them, and those have continued to give us a good return for our members. And that's why the investment comprehensive income has actually gone up. The other thing that we would like to talk about is the dividend income. You notice that because the stock exchange did very well, our dividend income also went up quite significantly. And finally, our real estate income went up significantly. You can see last financial year, we only earned about 11.1 billion shillings in the real estate, and this went up to 23.5 billion shillings. And that was driven largely by sales of our properties. So the properties that we had been building, we began to sell, and the profit we made on those went into our real estate income. So quite a good performance, distributed through interest income, distributed through a dividend. Some of our big companies that did not pay dividend the previous year, things like the banks in Uganda, Stanbic Bank, Baroda, Bank of Baroda, DFCU, who had not declared interest the previous year, did declare dividends this year, and therefore we were able to take advantage of that. Looking onto our member contributions, this is really the barometer that tells us what is happening with our member contributions. It tells us how the economy is performing, because this is money that employers are paying in every single month on behalf of their employees. So that went up by a modest, only 8%. And as you can see, again, that was slightly higher than the growth rate in the economy. But it also demonstrates that most of our employers have become resilient. You recall at the beginning of the pandemic, we issued an amnesty, and about 1,700 companies took advantage of that. That represented about 20% of our contributions. But as we approached the end of this financial year, a lot of those companies actually paid back. So about 80% of them paid back, and the ones that are still in arrears are quite few. But that demonstrates to you that in spite of that, especially some of the sectors that suffered, like education, we were still able to increase our collections by about 8%, which is a really good number for us. Benefits. I would like you to pay attention to this because suddenly we have seen that our collections only increased by 8%. But see what benefits did. Our benefits increased by almost 30% on last year. What does this demonstrate to you? In fact, if you net out the benefit with the collection, the growth is about 700 billion shillings. If you look at our financial statements, that appears to be the same amount of the previous year. So what is it telling us? It is telling us that our fund is no longer growing because of collections. It's now beginning to grow largely because of our investment income. It is definitely clear to us that the fund has become mature. We are no longer recruiting as many people to come on board, and the people who have been saving with us are now beginning to take away their money. That's what this graph is telling us. And you'll notice that between 2019-20 and 2020-21, the jump was a lot bigger than in previous years, which again shows us that the growth is attributable to the increase in claimants, but also one more thing. Last year, we allowed people who had COVID to claim under the invalidity benefit, and we've already told you that that number was about almost 2 billion shillings that we paid out, and that is a new benefit which we had not experienced before. So that, coupled with what I would call the people who suffered during the COVID and decided to pick their money, means that the benefits now are growing a lot higher than the contributions. Finally, let's talk about efficiency, and that's on our performance on the cost of administration. This is one of the best graphs I like to refer to because it demonstrates our efficiency. It shows you that our expenses or cost of administration as a percentage of the assets that we manage has been coming down. So that means that we are using less and less to service our customers, even though our balance sheet has been growing, right? So that's what it says. We aim to go below 1%. We are currently at 1.06%. So what are the implications for our performance? 3 things that I'd like to say. The first one is that the return to our members will continue to be above 10-year inflation. Let me repeat that again. Our performance, it means that our return to our members will be above 10-year inflation, which is that we will continue to demonstrate value for our members. Our members, if they put money with us, they will get out more than what they put in. Number 2, that we are resilient. In spite of the effects of COVID and the pandemic wreaking havoc on all the businesses across the globe, our performance shows that the fund has not only been resilient, but we've been able to withstand all the shocks that have been brought and thrown at us. Number 3, we know that the future is going to change. We know that there are some changes coming in because of the NSSF Amendment Act, which was finally passed by Parliament, sent to the President to accent, sent back to Parliament, and now the process is starting. But we know those changes are on the horizon. The fund is dynamic enough and will adapt and embrace those changes and thrive in spite of those challenges that are brought by the new amendments in the bill. So, how does our journey to 2025 look like? Our journey to 2025 is around our 4 key performance areas. In 2015, we launched our strategic plan, which was based on growing the fund to 20 trillion shillings of assets under management by the year 2025. Number 2, we would make sure that we would become relevant to our partners and our customers, our members would have a 95% customer satisfaction. Number 3, we would make sure that we have excellent processes. We excel in our processes that would culminate in us being able to pay our age benefit within 1 day. Our age benefit is our main benefit. It relates to members who've acquired the age of 55 and therefore are eligible for their processes. We've had all these guys for 20, 30 years. We know about them. We know when they will retire. We know when they will want their money. We should be able to pay them in one day when they present their claim. Number 4, we should have our staff, a delightful bunch, working in a delightful place, culminating in a staff satisfaction of 95%. That's our corner piece of our strategy for the strategic plan of 2015-2025. How are we performing against all these milestones? Number 1, so far, on the growth of the fund, you saw the number, we've reached 15.5 trillion shillings, okay? So we've got a couple of 4.5 trillion shillings to go to our milestone by 2025. Number 2, around customer satisfaction, we are on 86%, which is slightly below 95%. So 9 percentage points before we get to 95% on our customers. Where are we on the turnaround time? Our age benefit today takes 4 days. 4 days. So we are approaching our 1-day target. And finally, the place of work, we have almost touched our 95. Our staff today have a customer satisfaction rate of 95%. We believe that we will be able to achieve these targets given the trajectory we are on. So, I would like to conclude by telling you that your fund over the last 2 years has proved to be resilient and has been growing. In addition, we have prepared ourselves for implementation of the new law once it's signed. Thank you so much for listening.
Okay. Thank you so much, Richard. Ladies and gentlemen, you have heard, and Richard, you wound up very, very well in regard to our vision 2025. Of course, everything he has talked about is a build-up towards the attainment of our vision and our objectives. So, quick facts. Total assets under management, you've heard how close we are working towards that number. We're now at 15.5. Staff satisfaction, you've heard how we are working towards that, 92%. 94. Customer satisfaction is 86. Yes. Yes. My crowd here is very supportive. Yes. Customer satisfaction, 86%. Staff satisfaction, we are working towards 95. We are so far at 92. 94. Okay, 94%. So now you can see that we are working closer to the realization of our vision 2025. We want to take questions now. After such a beautiful presentation, we are ready for the questions. I can share this mic with anyone who is ready to ask. I know that there is an issue of the pandemic. Sanitizer is right here. Okay. All right. Who is going first? Oh, everything was clear cut.
Good morning. My name is Wadulo Mark-Arnold. I'm from Uganda Broadcasting Corporation. My question comes, of course, from your conclusion about the new law. What's happening inside in terms of, preparation? I know you can't really do much because it hasn't been passed, but what are some of those factors that you can see already starting to shift as a result of this debate? Thank you.
Thank you so much. We are going to take 3 questions at a time, and then we answer that first batch and proceed to the next. Yes, please.
Good morning. Nas Alifatia from NBS Television. You've not talked about whether the fund got any new members and the fact that many businesses have been affected by the pandemic. Could we be having some dormant accounts?
Okay, thank you so much. Any other questions?
Raymond Mijini from the Nation Media Group. Mine is just to ask what very specifically the figure is for people that were paid out for COVID-19.
Okay, Richard, he wants to know how much was paid out to COVID-19 patients. Are we ready for the first 3 questions, or we take more?
Yeah.
Take more questions, okay. Okay.
So the first one is our readiness for the midterm access. Can you hear me? Yes. Can you hear me? That's better. I don't know why it's... Hello? Can you hear me? Yeah, okay. All right, so readiness. The truth of the matter is that if we were asked today to pay qualifying members who've saved for 10 years and have attained the age of 45 and above, our current system will not be able to do it. We've said that many times because the system was calibrated to be able to deal with the old benefits we had, which were age benefit, withdrawal benefit, and so on and so forth. The good news is that in the month of November, we are changing our system. So by the beginning of November, once the system is changed, which we believe it should be, we will be able then to take on that task. That is the mechanics of it. The second mechanics of it is the liquidity. We've said over and over again that, as you've noticed, we are a long-term investor. These requirements have just come in, which we had not planned for. So as fund managers, we need to find a way of finding the liquidity to be able to pay these. So that, again, by November, December, we should be able to have put in place liquidity mechanisms to be able to meet those payments. So my answer to you and to the rest of the members and to the rest of the world is that we will be prepared once we've installed that system, which is about November. We hope that by the time the law comes back to Parliament, is discussed, and goes back to the President for assent, one of the changes that has been agreed to be incorporated in the law is that the Minister of Finance, who is responsible for the fund, will be the one responsible for issuing a statutory instrument to operationalize the payment of the midterm access. So we hope that the minister will do that in conjunction with the board, and the board will only give a green light for the minister to issue that when we are system ready. And as I said, that system readiness is planned for about November, December this year. The second question was whether we had recruited any customers. Yes, we've recruited a lot of members, 150,000 members, and about 3,500 employers have been recruited in last year. Of course, there are a lot of customers who have fallen off the radar and are no longer contributing. Those numbers are in the region of about 20% of the numbers that were. But the problem with a dormant NSSF account is that it is on and off. A lot of people get employment, they then fall off the radar, and then they get re-employed, and then they reactivate their account. So our number is very, very mobile, but certainly we've seen that there's been an increase in dormancy. But as I said, towards the end of the financial year, we noticed that a lot of the activity had come back. I mean, you saw in the President's address yesterday, the measures that have been taken by government demonstrate that we are working towards coming back to normal, and businesses have also started getting back into normal. As I said, there are still some customers who are suffering, but certainly we are looking positive in terms of returning back to normal. The last question was, yes, I mentioned the figure. It's about 2 billion shillings that we paid, and to about 60 individuals.
Richard? Thank you. More questions coming in?
Well, my name is Ismail Ladu, Nation Media Group.
Hi, Ishmael.
Yeah, hello, Richard. just an idea of what will be the return on investment on members' savings next week. Just an estimation, is it at 15, 12, 20? Just some, something to work with, given the resilience that you have ably demonstrated and explained. Just give us something to.
Okay, so Ismail, the last time I checked, my name is Richard Biarugaba, and my official title is Managing Director of NSSF. The last time I checked the NSSF Act, it said that the minister responsible for the NSSF will declare interest by the 1st of October every year. So, so I think you sort of get the drift. I am not paid enough to sort of make these announcements. But all I can say is that we've been giving value to our members. I've told you what the 10-year inflation was, all right? You remember the slide? It's about 5.4%. 5.4%, add 2 percentage points, that is 7.4%. Let's round it off to 8%. We will compete around the good return that we've given to our members because of that benchmark.
Thank you. So I think he has rested his case. More questions?
And you recall, we actually started this process to help you, especially the business journalists, to be able to analyze our numbers way before we make the announcement, so that when we make the announcement, or when the minister makes the announcement, at least you have a basis of why that number has come to that, so that you can begin to inform our members and also the general public.
Thank you, Richard. Nze Julius Kafuruma,
Yes, sir.
ndi wa Bukedde TV.
Yes, sir.
Ndowooza ab'oluzungu baweddeyo Barbara. They're still there? Okay.
Ab'oluzungu bakyaliyo.
It was an ambush.
Richard, there's a percentage here you mentioned for the cost of administration. Is it possible to give us the actual figure for it in
It's about,
monetary terms?
Yeah, it's about 164 billion shillings, right? God, how do I remember these numbers?
You SGR.
Yes, I know, I am.
Okay.
I am, but there are very many numbers I can tell you.
Yes, morning. My name is Ali Twaha, and I work with New Vision. I'm looking at the figure of the benefits, 29% increase.
Yeah.
It looked to be a very big figure.
Yes, that's
And
correct.
you only paid about 2 billion related to COVID. And I still feel the people who have been paid, okay, people claiming for their money are a lot. I would love to see a trend in the last 5 or 3 years, how the curve has been moving, and what does that mean? We've seen the fund is not growing as much.
Okay.
Kindly explain.
I can actually give you the numbers. For a very long time, we were paying around 18,000 members a year, which if you divide through is about 1,000 something a month. That number jumped up to about 25,000 a year for the last 3 years before this particular year, where it jumped to 28,000. Okay? So definitely there's been an increase, not only in the amounts of paid out, as you saw on the graph, but also in the number of people claiming. What we're still obviously doing a little bit of analysis, but we know that one of the things that prompted our people is that a lot of them now who are retiring have had big balances. So if you have a big balance and you claim, of course, the money will go up. The money amount will go up. But secondly, we also know that there is a lot of people who, when the pandemic hit, they had been leaving their money at NSSF because there was no need for it. But suddenly, because of the pandemic, maybe they've lost their job, maybe they have lost their income, maybe their other deals are not working out very well, so they have decided to withdraw some of their money or most of their money to be able to go and do other things. And we know that has been a big driver for increasing that number. And we know it's going to increase because as soon as the law is passed, the people who are 45 and have saved for 10 years, those will have an ability to remove at least 20% of their own money.
Paul Busharizi, The New Vision. Talking about your target of getting to 20 trillion in assets by 2025, you're now at 15.5. A rough calculation says you need to grow by 6% a year from here onwards. Do you have any sense of how these midterm releases may affect you getting to that target?
That's a very good question. And it brings me to this point that the media has not grabbed upon. I would like to task the media to go and read the Amendment Act. Everybody has paid attention to clause 24A, 24B, 24A, yeah, 24A, which basically says midterm access. What they do not realize in that law is that it does two things. It's going to increase coverage and it's going to increase adequacy, all right? So how is it going to increase coverage? Anybody who employs anybody will need to make a mandatory contribution to NSSF. Let me just repeat that. The law provides that we will no longer only collect mandatory contributions of 15% from employers who employ 5 individuals and above. The law is dropping that to 1. So if you have your person at home, if you have a formal contract with them, you will have to make a mandatory contribution for them of 15%. Guys, be aware. Second, most importantly, is individuals who currently contribute 15% from the employer and their own salary will be able to top up, I think that's the word, top up on top of their 15%. What is it called? A voluntary contribution. The law was not allowing it. Now you'll be allowed. In other words, if you feel that the 15% you're saving is not sufficient for your retirement, you will be able to top up on that 15% from either your salary or from your other means and build that number. The third one, and I think for me the most important, is the informal sector. We will be allowed to go to the informal sector and offer them products. Most of the products we believe we can offer to the informal sector are not retirement products because our research has shown that many people don't really think about their retirement that much, unfortunately. But what they think about are things like unemployment. What will they do when they become unemployed? Second thing they think about is medical. A lot of people have a medical scheme from their company, but there are a lot of people who have their own little business and cannot afford medical insurance. So why can't they save with NSSF and get a medical plan? Number 3, very important, a lot of people do not know how to save, do not have a means of saving for their education, especially for kids who might require quite a lot of money. We can make a product that is available for that, especially for the informal sector. The most exciting opportunity for us is the housing one, right? Again, a lot of people would like to save for a house, they'd like to get a mortgage and top it up, or even use their savings as collateral in a bank to be able to get a mortgage. What will we do? Definitely for the informal sector, that is the market we're going to target. So the law will allow us to do that. Currently, it doesn't allow us. So we believe that the new things that are contained within the law, the new opportunities of creating a bigger market for us, means that the 20% of people who've saved for 10 years and also have reached the age of 45 will not be big enough to impact the growth trajectory. So to respond to you directly, Paul, that target is certainly within reach, even in spite of the 20% amendment within the Act.
Okay, thank you, Richard. My name is Charles Boji, Man and Market Show. Just looking at the investment mix, yeah, you're right. I can see it's 78% in fixed income. And you mentioned how this affected your operations. Of course, the coming down of the, the rates, the yield rates on some of these fixed income instruments. Do you have?
By the way, I showed you the yield curve for only Uganda.
Yes.
If you had seen the yield curves of Tanzania, where we invest, and Kenya, where we invest, you'll have noticed the same trend.
I hear
because
you.
all over, interest rates have been coming down.
I hear
Yes.
you.
So,
Yes. So based on that, do you have plans of maybe probably reducing on the fixed income investments to other asset areas?
that's a very good question. It all depends on the available opportunities. You notice that we have 3 asset classes, okay? So let's start off with the one which is so difficult to increase your exposure to, which is real estate, okay? I always give the example of pension towers. Pension towers is going to cost us about 300 billion shillings to build. And that project is going to last us 3 years, maybe an overrun of about 6 months. But let's say 4 years, even if we were to be. So that's approximately 90 billion shillings per year. That is how much we can put in a concrete structure every year, 90 billion shillings, okay? But guess what? We collect 125 billion shillings a month. So think about it. The amount we need to pay for pension towers concrete is 1 month's collection. So it's so difficult to say that we will put more money in real estate because it's so difficult to build and put concrete there. So real estate is not an asset class. In any case, it's got its inherent difficulties, and therefore you cannot overexpose the fund to there. In fact, at 7%, we are slightly over our strategic asset allocation of 5%. So we can't put any more money in real estate, is what I'm basically saying. Number 2 is equities. Equities, we definitely have headroom. In fact, our strategic asset allocation for equities is about 25%. You noticed at the moment it's around 14-15% exposure to that. So we are low on equities and slightly high on real estate and high on fixed income. So, but if we wanted to increase our exposure from 15% to 25% in equities, we'd have to buy quite a big amount of investment in companies. Look at the stock exchanges. When was there a last listing in Uganda? Cipla, a couple of years ago. When was there a last listing in Kenya? Maybe last year, maybe the year before. Maybe the year before. I think they had a product there. Tanzania, the last listing was Vodafone, which was, I think, 2 or 3 years ago, right? So there are not very many opportunities in the equity space, unfortunately, because the law doesn't allow us to invest outside of East Africa. So the short answer to you, Charles, is that we don't have the ability to find other opportunities. We've got to keep what we've got, which is why we've got to load up on fixed income, because it is available in all the 3 East African countries. And the governments are quite keen, as you know, on raising funds through long-term funding, because that is what does real infrastructure. And that's where we will continue to invest. Of course, we compete with the institutional investors, but that's a story for another day.
Thank you so much, Richard. We'll take the last set of questions in English. I don't know whether you'd want some of the panel members to respond as well.
Yes, absolutely.
Okay. So we'll take the last 3 questions. I have one hand up here, 2.
2.
3, okay. Starting with the lady.
Good morning. I am Ritha Dong from Sanyo FM and the K Financial. So my first question, with the new revisions in the amendment bill, will you still be maintaining a 2-account approach? Because you said you needed to stagger how the money will be paid out to claimants, and as such, you'd need 2 accounts for one for long-term people and then one for short-term, right? So will you still be maintaining that? And also, if you could give us like a picture of the sustained closure of sectors. Education, tourism is staggering or is in a bad place, and the drinks sector, bars and whatnot. Assess the effects of the closure of those sectors on your collections and how much money is entering into your account or not. The other thing is also real estate.
So the first question will go to Patrick. The second question will go to Stevens.
Okay, and the third question. I see, real estate is booming, and one of the things people have been asking NSSF for is investment in low-cost housing so that members can use part of their savings or mortgage part of their savings to buy these houses. Is this something that we are going to see in your diversification plan for members?
That third question will go neatly to Gerald.
To Gerald. Let's finalize
All right.
the two other hands that were up.
Yeah, they are writing them down, so they
Yes,
will be able
just
to
a
answer.
quick one. Are we warming up for the telecom listing, specifically MTN on the stock?
Gerald will go with that.
Okay. One last question. Paul, did I see your hand up? Oh, sorry.
Mine specifically to you.
To me? Okay.
Yes. What are you telling investors, particularly around this law amendment, and they getting jittery with your balance positions at the moment?
Okay. So why don't my colleagues answer the first few questions?
Okay.
So guys, come over.
You'll take this last one, Richard.
Each of you has a mic.
Thank you. I think the question was regarding the amendments in terms of having two accounts, one for long-term, one for the shorter-term needs. Is that correct? Yes. Okay. Actually, you are right. It will naturally lend itself to that because, for example, voluntary top-up that Richard talked about, or when you go to the informal sector and they want to save for education, they want to save for, say, medical, you can't invest those monies in the same way that you save for somebody who is going to retire. So there will be, most of you may end up with the 2 or 3 accounts, simply because you are saving for specific needs that may require different timelines and flexibility in terms of withdrawing it. For example, if you are going to save for education, say for 5 years, the intent is you need to be able to match the maturity of that investment with the 5 years. And the flexibility in which you get access to that money is going to be very different from the retirement account that you have. So yeah, naturally there will be people with more than one account, depending on what their intent objectives are in that savings scheme.
Stevens.
Thank you. Thank you. The question was about how the different economic sectors have been affected by the pandemic. The first thing to note is that, surprisingly, which most people don't know, that the biggest sector contributing to NSSF is the education sector. I know that the education sector has actually been off, really on and off for the past 2 years. And of course, the tourism sector is not big, probably around 5% of what is coming in. So in a nutshell, our contribution have gone down by around 20%. If you put it in real terms, around 25 billion shillings a month. But of course, when the sectors ease up, it does not necessarily mean that then the schools or whatever will start contributing and rise up immediately, because they will have arrears, some of them. Then they have so many things that they need to do to catch up. And our philosophy in the fund is we rather let the employer stabilize so that they should be able to contribute long term rather than press them in the short term to bring in the collections. So it's going to take some time to stabilize, but that's how we are. Yeah. Okay. I can.
It's working.
It's okay. Okay. I have a few statistics here which Richard has shared. I didn't have them in my head, but he's been very gracious. We remember when the COVID struck, one of the things that NSSF did, even before any other sector, not even before government had declared, was to grant amnesty to our employers who were distressed. And we told them, please come, tell us what is happening to your business. If you are not able to collect, put your collections on hold. So we, in the education sector, we put 339, let's say 340 schools came up and asked for amnesty.
30%.
Yeah, which is about 30%. Then we have in the recreation sector, which you've been talking about, around 220. That's around 13% of who came up. Then normal trade, we had around 204 employers who came up. In health and social work, we had around 164. In transport and storage, we had around 126. You can go on and on. But in total, 1,730 employers came up and asked for amnesty. And at that time, that dip was equivalent to at around 40-45% of the collections. Eventually, as the economy is stabilizing, just like Richard has said, these numbers have started coming up as some of those sectors have opened up again. But still, it is slow progress. Thank you. Thank you.
Thank you. I had two questions. The first one was on real estate and whether we intend to have some affordable housing. The quick answer to the question is that it's actually very challenging to do affordable housing because there are so many definitions of what constitutes affordable housing. If you look at the World Bank and the IFC, there's what they call affordable housing and low-cost housing. Now, let me start with low-cost housing. According to the World Bank and IFC, that definition is between $25,000 and $30,000. Now, you can argue that in the Ugandan context, it's actually not so affordable. Now, when you go to low-cost housing, there's an institution called the Center for Affordable Housing. Now, when you look at their definition, it is a range of between $50,000 to $95,000. Again, we can argue it's not so affordable. Now, let me get to the specifics of the question, whether we have plans to do low-cost housing as part of our real estate plan. There are structural challenges of doing affordable housing in Uganda. The first challenge is VAT. VAT on residential construction is a cost because you cannot recover it, so you have 18%. The other hurdle is infrastructure. If you're going to do a project, say, in Temangalo, and you're putting up, say, 4,000 or 3,000 units, you cannot build them without roads. Now, according to our statistics, the cost of infrastructure constitutes another 15-20%. Then you have the other hurdle, the cost of land. The fund is just like any other developer that has to buy land. The cost of land for housing for the fund will be between 10% to 20%. So already 50% of the cost is into costs that are unavoidable. Then you have fees to be paid to the local authorities. Before any plan or master plan is to be approved, you have to pay fees to the local authorities. You have to pay fees to NEMA. So the issue is, it is extremely difficult to do affordable housing or even low-cost housing. But the fund is making every effort to come up with low-cost housing. We believe that in the next 3 years, we'll have over 1,000 units, and 60% of those units will be in the affordable but not low-cost housing space. Because, like I've told you, low-cost housing is extremely challenging. Let me give an example in Kenya. When Uhuru was sworn in for his term, which is about to end in 2022, one of the big 4 things he promised was affordable housing. In fact, when you go to Kenya, if you read anything about Kenya, one of the big 4 is 500 units of low-cost housing. By the end of his term, there are only 500 units that have been done in Ngara. Now, Kenya went ahead and they put in place every infrastructure required. They opened a mortgage refinancing company for demand. They provided infrastructure, they provided land, they provided everything. Only 500 units. So I think you can understand why the fund will find it difficult to provide low-cost housing. But in the affordable housing space, and within the definition of the IFC and the World Bank, we will deliver to the tune of almost 1,000 units in the next 3 years. Second question was on the teleco listing. Now, there's no any public information regarding the opportunity or the offer, so I don't think I can answer anything. The only thing I can say is that the fund is an investor that is always looking for opportunities, and when the opportunities do come, we will look at them.
You notice that we've become politicians as well. But as an investment guy, you'll have heard of something called the public what do you call it? Material non-public information. And at the moment, there isn't enough information in the market for us to be able to make a judgment call. So just like you've had, we are also waiting. And as he says, if the opportunity is good, we'll take it. If it isn't, we won't. Okay, so the final question was from Raymond, I think. He asked about whether investors should be jittery because of the passing of the new law, okay? If you remember my elaborate response to Paul about our fear of target of 20 trillion, I alluded to the fact that the opportunities in the bill that is currently coming back before Parliament are far greater than the threats within that bill. So let me repeat it. The opportunities within that bill are far greater than the threats within that bill. In fact, I can give you some numbers. The numbers are that if you look at our members who qualify for the 45-year, 10-year new amendment that's coming there, the number is about 5.5 trillion shillings, their balances. So if you take 20% of that, it is about 1 trillion shillings. But if you do a further analysis of that, almost 30%, 40%, almost 50% of that number are people who ordinarily would have qualified to get their money. People who are already 55, people who are already 50, and people who are already 60. So they haven't taken their money now because maybe, and I know, I'd like to emphasize it, they are putting their money there because there are very few places where you find a double-digit payment on your investment in this town, all right? I'm sure you all invest and know what sort of returns you get and the risks you take. So if you put your money with NSSF, you'll get at least 8%, we said so today, and you'll be doing it at no risk. Whereas if you put it in a kiosk or into farming, as many of us tend to do, you know how difficult it is to look after and how risky it is. So the good news is that the core people who will qualify for that are probably, and I'm stretching this, probably in the region of half a trillion shillings. So 500 billion shillings, who would, I think, come and take up that offer. And as I said, if it is that, with the staggering, with the preparation that we've done, we should be able to keep the fund safe. And therefore, investors who want to invest here shouldn't be afraid. The reason we initially were opposed, and it is very public, we were opposed to the 3 clauses that were in there. You recall what those clauses were. The first one was 45 or 10 years, all right? That number was staggering, all right? I've got a lot of colleagues who are not here today, 37 years, who have saved for 10 years. They started saving at 27. They have already saved for 10 years. You can even take it as far as 25. Somebody who came in at 15, we are allowed to register people at 15, 16. So 16, 26, you've already saved for 10 years. You can come and take 20%, and so on and so forth. So that was drastic. The second clause in there was people who are out of employment for 3 years and have attained the age of 45. Again, that is zillions of people, because it doesn't matter how much they've saved, but there are a lot of people who fall in that category of they have reached the age of 45, they are no longer in employment, and they are therefore entitled to 40% of their money. The other category, which is the less fortunate one, was the disability one. As you recall, that one was that if you've been out of employment for 1 year and you have and you're disabled, then you can get 75%. That wasn't too onerous, but it still was a significant amount of money. So if you had put all those figures together, the number was coming to about 6 trillion shillings, about 5.6 trillion shillings, which you can round off to 6 trillion shillings. 6 trillion shillings as a percentage of 15 trillion is a big, big number. It would require us to put it into context, we collect about 1.3, 1.4 trillion shillings a year. We have investments of about 1 trillion shillings, which mature every year. So that means that in a year, we would need at least to stop investing all the contributions we get, to stop investing all the maturities, and put that to payment. It would definitely affect our returns. So to cut the answer short for you is definitely investors need to be aware that the clause that has been included or has been suggested to be included in the law will not be onerous. And as I said, the gross number is 1.1 trillion shillings. We believe that if push comes to shove, you're looking at about maybe half of that. Thank you so much.
Thank you so much.
I think we can do the Luganda bit now. Mwami Bukenya. Is it Bukenya?
Yes.
Kafuluma, sorry, Mwami Kafuluma.
Here is the microphone if you need it.
Mwami Kafuluma, nga simanyi interest rate bwe bagiyita mu Luganda. Because I know.
Okay, Dreyenza nnyo. Idi ogenda kutandika na kutunyonnyola ku ngeri ekitongole gye kikuzeemu oba oliawo ne bayambye okula wakati nga bannammwe bo baperforminze obi omwaka oguwedde.
So guno omwaka of course gwabadde nga gulimu ebizibu bingi. Ekisooka economy tekuze bulungi, yakuze ku 3.3%. Inflation eri wansi, naye ekibi kya inflation kitegeeza nti tewaaliwo economic activity nga nnyingi. So ndaze ne graph eraga nti interest rate akatale kebadde esasula mu investments zetuteekayo naye egudde wansi bw'ogigeregeranya ne ssente ze twafunanga emyaka 3-4 emabega egudde wansi. So mu kulaba kwaffe, in spite of ebizibu ebyo byonna, tulaba nti tukoze bulungi kubanga essente ze tulina okuteeka okusuubuza ez'abakozi baffe zirinnye okuva ku triliyoni 13 ne zituuka ku triliyoni 15. So tulaba nti tukoze bulungi. Amagoba ge tukoze gayeyongedde ne gatuuka 1.8 trillion amagoba ge twakoze ge tugenda okujjamu okuwa members baffe interest. So mu kulaba kwaffe newankubadde embeera ebadde nga nzibu, tulabye nti NSSF ekoze bulungi mu mbeera eno enzibu, naye nga sisobola kwogera interest gye tunaawa kubanga ogwo omulimu si gwange, gwa minisita wange wa finance.
Okay, ogambye nti ne member contributions nazo zeeyongeddeko from what to what? Era n'omuwendo gwe
member contributions omwaka oguwedde zaali ku 1.2 trillion, kati zeeyongedde ne zituuka ku 1.38 trillion okweyongera. Naye ekisinza okweyongera be bantu abajjayo ssente zaabwe, kubanga tulabye nti omwaka oguwedde abantu abajjayo ssente zaabwe balinga 25,000 naye nga amount yalinga 400 billion. Guno omwaka tulabye nti zeeyongedde ne zituuka ku almost 700 billion, 694 billion shillings. So tulaba nti abantu essente zaabwe bazaagala, nga tumanyi nti bintu bibiri ebikireese. Ekisooka, abantu abakulu kati abaagala kufuna ssente zaabwe babadde balina emisaala minene nga essente baatereka nnyingi. Ekyokubiri, tumanyi nti ne covid abantu abasinga ababadde baleseeyo essente zaabwe kati batandise okuzijjayo kubanga olw'ebizibu bya covid baagala kutandika bizinesi. Amagoba ge tubadde tubawa tegamala, baagala batandike ebintu ebyabwe ebisobola okubawa essente ezisinga ku magoba ge tubadde tubawa.
Ogambye nti benefits z'ekitongole nazo zeeyongera ebitundu 3 ku buli 100. Kiki obadde otegeeza?
Nga ntegeeza nti abantu abadde bajja okufuna essente zaabwe beeyongedde. Beebo abatuuse emyaka 55 oba 5 nga tebalina mulimu ne bajja ne bagamba mbu essente zange mubadde muzinterekera okumala emyaka 2-3 kati nzaagala ngende nange nkozesa ebyange. So tulabye nti essente ezo zeeyongedde abantu abazijja okuzikima.
Waliwo ssente ze mwasasula era mwaka oguwedde oba mu mugalo ogwo za validity, wagiyita validity benefit.
Invalidity benefit.
Yes.
Yeah. Abantu kumpi nkaaga abaali balwadde obulwadde bwa COVID nga bali either mu hospital oba abamu nabo baafa. Twateekawo facility nti bw'onooba nga otandise okwagala ng'ogenze mu ddwaliro nga essente ez'okusasula eddwaliro tezimala, osobola okujja n'ojjayo essente zo ne zikuyamba okusasula eyo bill. Kati twasasula kumpi biliyoni 2 mu bantu abo abajja okutusaba essente. Kyekyeyongera ne ku ssente eza benefits ze twasasula mu mwaka oguwedde.
General performance eno etegeeza ki eri mmwe ng'ekitongole?
Etegeeza nti target yaffe gye twateekako okutuuka ku 20 trillion nga omwaka 2025 kituukiridde kubanga kati tuuse ku 15.5 trillion. Ekirala kiri nti service gye tuwa bakasitoma baffe yeeyongedde okuba ennungi, basitaafu baffe bali bulungi, ate nze nsuubira nti ne bakasitoma baffe amagoba ge bagenda okufuna next week minisita ganaaba ayanjulidde gajja kuba malungi okusinziira ku mbeera eno ebaddewo nga si nnungi.
Twogere ku tteeka eryakomyewo mu Parliament erya Midterm access. Wasanyuka nnyo ng'etteeka eryo finally speaker agambye nti likomewo. Tubulireko ku position y'ekitongole ku tteeka eryo.
Well, etteeka eryo nga bwe limanyi liruddeyo mu Parliament bwe lyagenda ewa President okulisayininga mwalimu clauses 3 nga zongera ku bantu abanaafuna ssente zaabwe okuzijjayo nga tebanakufuna retirement yaabwe. Nga tumanyi nti singa etteeka lyayitamu bwe lityo kyandireetedde nnyo etteeka kampani yaffe ya NSSF okufunamu ekizibu kubanga zandibadde nga 6 trillion ate nga tulina 15 trillion. So President yamitinga ne ba workers representative n'ekitongole kya gender n'ekitongole kya finance naffe aba NSSF ne tutuuka ku nkiriziganya egamba nti abantu bokka abanaqualifying okujjayo midterm access ya 20% bajja kubanga be balina emyaka 45 oba nga bamaze okuteekayo essente okumala emyaka 10. So otaddeyo essente okumala emyaka 10 ng'ate otuuse n'emyaka 45. Ezo essente ziyinza okubeera nga trillion emu naye tumanyi nti ezimu ezo essente kubanga abantu abamu bandibadde baziggyayo dda kubanga tebeetaaga etteeka kuzijjayo. So tulowooza nti bw'ogerageranyamu oyinza okuvaayo nga 500 billion ng'ezo tusuubira nti ffe nga NSSF kijja kutuyamba okuzisasula obulungi. Ate ekirala mu tteeka eryo mulimu obukwakuliza obulala obunaatukkiriza okweyongera bizinesi yaffe. Katugambe abantu abakola mu kampani eza nekolera jange bajja kuba nabo bakkirizibwa okuteeka essente zaabwe mu NSSF. Ekirala abantu ababulijjo ababadde bateeka NSSF kati bakkirizibwa okutopinga up ku ssente ze babadde bateekayo. So tumanyi nti mu tteeka eryo mulimu ssente endala oba bizinesi endala gye tugenda okufuna eneetuyambako okusasula zino essente ezinaasobola okugenda.
Pozi ekisembayo ojja tubuulira n'erinnya liryo Ekiganda kuba ennaku zino Oluganda olwoyogera luzibu nnyo.
Nze Seruwadda.
Tweyanzege. Thank you so much, Richard. Thank you so much, members of the press. We have come to the end of this press conference. And yeah, thank you for your time. We look forward to the 29th when we'll be announcing the interest rate. We'll keep you posted on that.